Hey guys, RC Peck here. We got a lot to cover and I want to jump right into it. So on the screen here, you see a price chart of the S&P 500 with dividends reinvested. And I want to just point out between the two blue horizontal lines is where the price has been since August. So I'll also show it to you this way. This is kind of the vertical way. So this week, I'm recording this on Friday, which is late for me to record my weekly video. But we had an election here in the United States on Tuesday. And going into election, the market was going sideways. Now, I point this out because I read a couple places that the market was falling going into the election. Now, I don't know what time frame they're looking at, but what I can say to you is most people use the wrong time frame. Because this time frame I'm showing you here clearly shows a market going sideways. Again, if you look at the screen, between the two blue lines is a sideways market. And as long as the S&P really stays above, let's just call it, if you want a number, SPY, I'm looking at, stays above, 320. Not that if it's below 320, I'm bearish, but man, I can't find a single reason to be bearish if SPY is above 320. But people get scared. They don't know how to look at price charts. They've never been trained to look at price. They've been trained to hear things and then interpret it that way. So look, we've got the S&P 500 dividends reinvested going sideways. Sideways is good. Sideways is digesting, especially if you consider that. Let's just see how much the market went up. Again, I'm doing this during market hours on Friday. The market's up 59% if you measure the United States market by SPY. So you would expect a market to expect anything to digest that move after I'm rounding now, after it moves up 60%, not in 6 years, but in 6 months. So that's about 10% a month. So one would expect some digesting to go on, and that's what's going on. Now, what I believe is happening is the markets around the world, and I'm going to show you some that have broken out to new highs, but the markets are looking at the election results and going, oh, looks like democracy is happening in the United States. Looks like the states are doing it the right way, at least on the counting. I know we could go down a deep rabbit hole around whether the states did it the right way about how they allowed votes in, because I know there's been some voter suppression. But as far as now that the election is closed and now they're counting votes, which is part of the American process to count all the votes that came in by the target date and time. And so that's what's going on right now. The markets are looking, going, oh, they're doing this properly. I like when things are being done properly. The other thing I think the market is doing is saying, look, if Biden wins, the market's going to go higher. And what the stock market is doing is if Trump wins, the market's going to go higher. So the market's going to go higher regardless. And the reason it's going to go higher is because, well, there's a thing called the Fed, and the Fed is perceived to be helping people. There's some who believe the expansion of the balance sheet is not helping the stock market at all. It's hard for me to understand how that's the case. But I believe what we're seeing is whoever wins, the market's going to go higher. Now, the market has not gone higher yet with SPY, right? So what could have it fall back down? It just fall back down into its range is if there's huge contesting on when each state has closed. And as I'm going to move over to Fox News. I figure if I go to Fox News, the liberals nor the conservatives can be mad at me, because Fox News is a conservative website and it has the liberals winning on a conservative website. So it was the most bipartisan website I could find. So right now, Fox News says Joe Biden has 264 electoral college votes and Trump has 214. Not all states are in. The light blue ones, Nevada, still has not officially posted who won. Same thing with Georgia, same thing with North Carolina, and same thing with Pennsylvania. Now, no predicting here, but right now it looks like Nevada, Georgia, and Pennsylvania right now are leaning towards Joe Biden as far as the count goes. And so the market, I don't believe, is necessarily saying, oh, good, Joe Biden is going to win. The market's going to go higher. I believe what the market is doing is saying, oh, good, this is how vote counting is supposed to work, where the states do this properly and legally, and they count the vote. And so that's why the market is, and again, if you look at the screen here, it's still going sideways. The market is still going sideways. Nothing has changed with that. And let me point out a couple markets around the world. I'm going to first show you a couple markets that are sideways. So here is all world ex-US. So it is actually broken up and above its sidewaysness. But as you can see on the screen, it still has a little noise to get above before all world ex-US breaks out to new lifetime highs. I can show you the developed world here, and it's the same thing. This does not include emerging market. It's broken up a little bit, right? If you look above the blue line, it's broken, but it still has this noise to get above. But guys, that is more bullish than bearish. It's moving higher. If I go over to China and just look at the Chinese index based on FXI, that has broken out of a, let's call it a 2-year trend. If you can look at the blue line, China has clearly broken to the upside. Now, it still has this noise over to its left or in its past that it needs to break above. But the fact that China's breaking higher based on FXI, it's the iShares China Large Cap ETF. That's a sign of strength. So I'm showing you sideways to breakout, but not yet new lifetime highs. I'm going to get to some of those. Here's physical bricks and mortar retail. So this is the Spiders S&P Retail ETF. Guys, this is not e-commerce. This is actually old school bricks and mortar. And if the black line is above that support resistance zone that I just put on there, that's bullish. Now, it's still going sideways. It's still digesting, right? But a digesting market, a sideways market after having moved, let's just see what XRT has moved. That's up 100% over 6 months. If something's up 100% over 6 months and then it takes a break and goes sideways, that's not bearish. That is digestion. You look at, I have yet to show you breaking out to new lifetime highs. Here's small cap precious metal mining. This is up about 170%. Let's just see what it's up. About 190% to that peak there. This is called digestion. It's digesting. Yes, from its peaky peak down to its little trough right here over the last 2.5 months. But guys, this is a bullish formation. And you've got to believe if something goes up, what did I say, 190%, 200%? You better believe it is going to digest that move. That is a 200% move over going from the bottom of March to, what are we at, November 6th today. That's sideways. That's digestion. What's so important is that you learn how to look at price charts so you can filter out all the BS that's out there. ITB, which is housing. This is the iShares US Home Construction ETF. Again, going sideways. Look at it. It's going sideways. Sideways is not down. Sideways is not bearish. Sideways is sideways. ITB, let's just see the big move ITB did over this time period. That was up 150%. You better believe if something's up 150% over a very short time period, that's going to take a break. And that's what's going on. So those are all my sideways but firming. So no, the market's not falling. The market is looking at election results and going, so far so good, America. You're counting appropriate. You're going step by step. You better believe there's going to be a paper trail for every single state count that's in question, right? And so some of you may say, yeah, but Trump's saying he's not going to leave the White House or he's going to fight or lawsuit. The thing is, the market knows how Trump speaks, right? So the market's not hearing anything new out of Trump, right? So of course he's going to contest any state he lost. That's what he's going to do. But the market knows that. So what the market may also be doing right now is saying there will be a clear winner, whoever that is, there'll be a clear winner. But what I believe the market is doing is saying democracy is happening, and this is what it looks like. And that's why I just showed you 5 or 6 symbols. They're all going sideways. Some have broken out, but they're still below lifetime highs. Okay, now I want to show you some symbols that are at new lifetime highs, that have already broken out, and they've never been as high as they are now. So let's actually jump over to China and look at the NASDAQ of China. So this is the NASDAQ of China. It is the Invesco China Technology ETF. That's new lifetime highs, and that's a clear breakout to the upside. So any sign of trade wars, now trade wars absolutely hurt China more than the US, and I've talked about it multiple times. But here you have the technology of China, China's NASDAQ, that's just what I'm calling it, at new lifetime highs. Let's go with semiconductors. Semiconductors are at new lifetime highs. As a reminder, new lifetime highs is a sign of strength. Trying to hold back the sarcasm there. Here's biotech. It was at a new lifetime high yesterday, Thursday. Today it is just digesting a little bit of that move. But look at this. Anything with biotech above that resistance support line is absolutely bullish. Let's go with materials. So here you have materials at new lifetime highs. Here you have healthcare at new lifetime highs. So just let's see, healthcare is at new lifetime highs, semiconductors are at new lifetime highs, materials at new lifetime highs, biotech, which is a subsector of healthcare, is at new lifetime highs. Technology itself, XLK, is still digesting its move. Let's just see what that move is. It's actually, hold on guys. Technology up 80%. So it would make sense that technology is digesting its move. So we have new lifetime highs happening, and there's plenty of companies. CDNA, here's a company that's at new lifetime highs. I just got two that actually sounded similar. CDNS is at new lifetime highs. This is Cadence Design Systems at new lifetime highs. So companies are breaking up and out. We're having new lifetime highs happen all over the place, both in individual companies and in major subsectors of the market. The NASDAQ of China being one, semiconductors being one, biotech being one, healthcare being one, materials being one. So those are non-significant. Those are, pretty significant parts of the market. Okay. Now, what hasn't changed? So I started with markets or slices or splices or segments of the stock market that are just digesting, just going sideways, and they're looking at what's going on in the US. And whether it's Europe looking at it or developed markets looking at it, international looking at it, let's look at how emerging markets is. Emerging markets is doing very similar. It broke out, but it still needs to break out to new highs. That's strengthening. Okay, the last place I want to look is parts of the market that are still very weak, So here's a whipping boy of mine, SPLV. This is the Invesco S&P 500 Low Volatility ETF, and I've pushed back against this heavily many times because people get hijacked by the words like, oh, low volatility. Guys, when I bring this stuff up, I'm not diminishing the people who bought this. What I'm saying is they got lied to. They have not been taught how to grow their money in the 21st century. They're still using ideas from the 1970s because that's what their big box advisors are telling them to do. So here you have S&P low volatility that's under a major resistance point. Okay, now S&P low volatility fell 37%. The S&P fell 34% during the COVID crash. This fell 38%. The low volatility thing fell more than the stock market. By the way, the Qs, the NASDAQ 100, fell 28%. This fell 38%. So I pound the table on this, and I don't always know how to do it because sometimes they just get mad. But people bought this because they were told this is a safer place to be. Right? They were taught that or told that because of the phrase low volatility. And I absolutely bet you the people that bought this were over 60 and 70 and 80 right? People who said, okay, I've got to be in the market, but I have to be in a way that's low volatile. So they literally got hijacked. They got lied to that those words were going to help them. The low volatile ETF fell 38%. The dangerous, crazy, horrible ETF called the NASDAQ 100 only fell 28%. Now, this one, SPLV, low volatility, went up 40%. And I think, going from memory, the NASDAQ 100 was up, 80%? This is how people are getting hurt. They're reading, and what they're reading is they're saying, oh, what I'm doing is right. I'm buying low volatility. I'm buying utilities. I'm doing the right things. I'm going for things that have the word income in it and dividend. I guess I'll be okay. And then they see their accounts get hit, and then they get scared, and then they go to full cash. This is why. So that's SPLV, nowhere near. Yes, it's going sideways, but it's going sideways below major resistance. I'm not even talking about this huge sell-off right there. Okay, couple more. Banking industry, quite honestly, I don't want to say it's dead because we need to put our money in savings and checking accounts. But when I grew up, I had a passbook, and I'd go to the bank every week with my dollar that I'd save, or every other week, and I'd give it to them, and they'd put it through a machine, and I'd see a new row on it. My mom was a bank teller, and she taught me how to save. I'm a very good saver. You don't need to go into a building anymore. People don't even need to go to ATMs anymore. There's Zella and Venmo and PayPal and whatever the other 30 ways of transferring money to someone in a really easy way based on a phone number or an email. So I don't know how banking's ever going to get back up. I don't think it is. This is not a new theme I've had. I think it's permanently in a kind of a dying phase. And any sort of financial company, they're actually a tech financial company, right? PYPL is PayPal. This is a $250 billion company. $250 billion, that's 250 billion-ish. And they use technology to help people transfer money around. By the way, this company was purchased for $1.5 billion by eBay in 2001. eBay's market cap today is $40 billion. That company they bought for $1.5 billion is now 6 times its size. But what you're looking at here is a technology stock that focuses in the financial arena. And then you have the energy sector, which is the sector that keeps on dying. I bring it up because I guarantee you there's newsletters out there selling the companies inside here with huge dividends as a place to buy dividends. ExxonMobil is one that has a 10 or 11% dividend. But guess what happens, guys? If you get an 11% dividend and what you own is down 50% in a year, you've just lost 5 years of your dividend. And so what's happening is energy is going away the way we think about it. The Chevrons and ExxonMobils, they are going to be changing, and it started decades ago. Now there are energy companies. TAN is the Invesco Solar ETF. Okay, so this is an energy ETF, right? But they're using technology to create energy, right? They're using solar panels and the technology behind solar panels. And if you look at the screen, you can see, yes, that's also digesting, right? It's going sideways for the last 5 weeks. But again, what you're looking at is technology. And we're going to have to come up with a new term for technology because almost everything that's moving higher, here's Walmart. Why is Walmart moving higher? It's becoming a technology company. Yes, it has 4,000 stores, but they bought a company called Jet.com. And Jet.com was this total mess of a company that had no revenue. And I mean, it was brilliant, right? It had one owner. It had one potential buyer, Walmart. And Walmart bought it for some unseen amount of money, $3 or $4 billion, and everybody lauded Walmart for buying it. But guess what happened? Walmart's market cap went up multiples of Jet.com, because what happened is Walmart took a page out of Jeff Bezos's book and said, we're going to do press releases on how much our e-commerce is growing. And all of a sudden you had Walmart's e-commerce growing by 30, 40, 50% a quarter. And the world going, oh my God, Walmart is actually going online. And they got jump-started by buying Jet.com. So what you're seeing is Walmart is turning into technology, or the reason why Walmart is going higher is because of technology, right? It's the same thing with Target. Target is moving higher because of people buying more and more of their home goods on Target. Like Target's becoming kind of a home goods online business. They're learning. And so I want to bring this all back to the election that is happening. The voting stopped. Actually, I don't even know what time it stops on November 3rd, whether it's midnight. But the actual casting of ballots has stopped, but the counting of ballots is still going on. And the world is looking and saying, yeah, you're doing that the right way, America. And there's parts of the world, and I've pointed them out to you already, that are already breaking up and out, both individual stocks, sectors, subsectors, all over the globe. And so that's why I train people to look at price charts, right? That's why I say you've got to learn how to turn on your pattern recognition part of your brain to be able to look at price and go, I know exactly what to do. Thanks, guys, for being in my world. Again, this is R.C. Peck with Fearless Wealth, and I will see you on the next video. All right, guys, take care. Hey, guys, if you like this, you're going to love the 3 mistakes video, because it shows you exactly what mistake you are making if you don't have the growth and income you want. Go ahead and click, and I'll show you immediately.